Welcome to Unit 8, everyone. In this chapter, we're going to be going over Chapter 8. And the reason for that is Chapter 8 deals with itemized deductions. Chapter 6 dealt with deductions for AGI. Itemized deductions are typically deductions from AGI, so it flows a little bit smoother. Chapter 7 we'll go over next week. That deals more with business losses. So it just flows a little bit better to go from for AGI than from AGI. So we're going to get PowerPoint here. We've got itemized deductions. Learning objectives: identify qualified medical expenses and compute the medical expense deduction, identify taxes that are deductible as itemized deductions, identify different types of interest deductions, compute the amount of charitable contribution deduction, and identify any limitations, discuss casualty and theft losses, determine the calculation of qualified business income deduction, describe tax funding considerations for itemized deductions, and finally, describe compliance and procedural considerations for itemized. Itemized deductions. Generally, the Internal Revenue Code permits certain personal expenses to be deducted from AGI. Schedule A of the 1040 as itemized. Then the taxpayer may deduct the higher of itemized deduction with standard deduction. We kind of got an overlap of. So this is Schedule A. This is what it looks like. It's going to have all the various itemized deductions. If your total down here on line 17 is greater, that's what you use. So medical expenses, you're going to see this up top here. So we're kind of going top down. So they're subject to a 7.5% floor, and you deduct amounts over 7.5%. So if I had 100,000 in income, that was my AGI, I would need to incur 7,501 of medical expenses before I start to receive any type of benefit. Taxpayer can deduct certain medical expenses for and be qualified individuals, taxpayers' dependents, children of divorced parents, or the taxpayer themselves. Various qualified medical expenses: diagnosis, cure, treatment, or prevention of disease, long-term care, medical care insurance, medical expenses that affect structural function of the body, and transportation. We're going to go with the first one here. Diagnosis, cure, mitigation, treatment, or prevention of disease. That includes routine physicals or dental exams. Also permits expenses to cure a specific ailment, but it cannot be an expenditure to improve one's general health. Think vacations. Think, I had broccoli dip for lunch. Those would not be deductions. It's not a specific ailment. However, weight loss programs prescribed by a physician to cure specific diagnoses such as hypertension, diabetes, obesity may qualify as a deduction. It's got to be prescribed. I can't go into the local Walmart and pick up some fat burning pills and say, "Yep, this is a medical expense." It wasn't prescribed. Medical treatment must be legal, meaning not for controlled substances. Generally, non-prescription drugs, supplements, and health foods are not deductible. Again, I like to have the occasional salad. Good for me. I'm living healthy. That's not an deduction. It's got to be specific. Special camps or schools that have appropriate medical equipment and programs for children with physical or learning differences may be deductible. It's a legit expense. Procedures affecting function or structure of the body. Expenses are deductible if it impacts function or structure of the body. Physical therapy, eyeglasses, hearing aids, dental exams, cleanings. Cosmetic surgery, generally not deductible unless you need it to correct a deformity, personal injury, or disfiguring disease. That's a kind of a high bar to clear. There's a lot of court cases on that regarding cosmetic surgery because there's always a personal use component to it. It's difficult to clear that. You can, it's not impossible, but you typically don't. Transportation, essential for medical care. Taxpayer can deduct actual expenses for automobile, taxis, airfare, and ambulance fees if travels for medical reasons. The auto mileage, this is 22, 23. I think it changed ever so slightly. I want to say it's 19.5 cents a mile. Meals are subject to the 50% disallowance with exceptions. Section 213D2 limits lodging costs to $50 a night per person. And if the patient needs to be, needs a companion, they also get that $50 a night. Qualified long-term care. This is a legit medical expense, so it's still subject to the 7.5% AGI floor, and the patient taxpayer must be chronically ill. And also deduct premiums subject to certain limitations. Chronically ill, in the eyes of the IRS, person cannot perform at least 2 of the following tasks for at least 90 days. Eating, toileting, bathing, and dressing. So they basically need a caretaker, essentially. Capital expenditures for medical care. Generally, acquiring capital assets and rendering medical care are not deductible. Exceptions, items that relate to the sick person, eyeglasses again, service animals, artificial limbs, wheelchairs. Those are all legitimate. Those are deductible when paid. Items that permanently improve or better the taxpayer's residence, a swimming pool to help heal a patient's arthritis. That's a pretty specific example. There's a pretty famous court case relating to that. Can only deduct the outlays. It's increased by the fair market value. Outlays to remove structural barriers in home, disabled person, installation of entrance ramps. You have to incur these expenses for the medical care. Those are deductible and paid. Those are legit. Cost of living in institutions, cost of inpatient hospital or institutional care is deductible. The main reason the taxpayer is there is for medical care. Covered costs include meals, lodging, and other medical care rendered. Examples: hospitals, right? That's the first thing to think of. Nursing home, school for the disabled. Amount and timing of the deduction. Generally, taxpayer can deduct qualified expenses only if you're paid. Individual taxpayers are generally cash basis, so, irrespective of whether cash or accrual method. Exceptions, credit card payments, those are being paid when charged. It's in place of cash, right? It functions in a very similar manner, but there's just an extra step. Instead of paying cash, I use my credit card. I pay off my credit card with cash, so it's deemed to be a cash transaction. Prepaid expenses are deductible only when services are actually rendered, unless you have to prepay. Then it would be when you pay. Taxpayer can only deduct unreimbursed medical expenses. If the taxpayer deducts $50,000 in medical expenses in year 1, but in year 2 they're reimbursed for $20,000 of it, taxpayer must recognize that $20,000. I received a benefit from the $50,000, the itemized deduction, assuming I had most. In year 2, I'm reimbursed $20,000. I've got to claim that. I can't receive a benefit of $20,000 and then get 20 of the $50,000 and then get 20,000 reimbursed and not recognize it. I would be double dipping it. Taxpayer never deducted the $50,000. Taxpayer does not need to recognize the $20,000. I didn't get a benefit for the 50. I don't have to recognize it. I think we're going to stop that one there. So we covered the medical expenses, and then we'll get into the salt taxes next.